Just a quick trade wisdom point that I'd like to make for everybody. I was having a conversation. We had a meetup on Friday for CT members here in Chicago in my office building, and I was having a little conversation with someone about losses. This obsession, and it's understandable. This high focus on avoiding losses. And we all have this within us that we want to do whatever we can. We want to study, I guess I can call it study our losses out of our trading, right? Somehow there's got to be some code to crack that would make it so that we never take losses. And what I'd like to propose is a different way of looking at losses. It's we're approaching Halloween here in the U.S., and you have a lot of little pumpkin patches and little mazes and stuff that you can take your kids to. It's for adults too, and some of those include games, you know, where you can pay a certain number of tickets or a certain number of dollars, and you have a chance at winning, you know, a big teddy bear or whatever by shooting a BB gun or darts or things like that. I'm sure you're all familiar with those games at the county fair and so on. It's it's really the same process. Your loss is look at the loss as the cost of having a chance at a win. Just like paying $5 to throw 3 darts or to shoot balloons or whatever. You know, if I came up to the game at a carnival and I didn't pay a dime and wanted to play, I can't play. I have to pay to play. And if you're sitting there trying to figure out how to think off your losses from your trading plan, then chances are you're in a simulator and you've been in it for 8-10 years of simulating, or you're sitting out to the point where you cannot stand sitting out anymore. At the end of the day, you have to pay up. You have to pay. And the loss is really the cost of acquiring the chance to win, period. It is just a completely natural part of what we do on a day-to-day basis. If I don't pay for that sandwich, I don't eat it. If I don't pay for my ride share, I don't ride, period. So your losses are really a little fee that we have to pay. We have to pay this fee in order to win. And our goal, so you might think, but sometimes I don't lose. But our goal is, in the long run, to get a benefit from paying this fee that far outweighs the fee. Otherwise, we'll be out of business. So for those people who put on a trade, wait forever to put on a trade until the stars and the moons and everything aligns, and then you hold on for a 30% loss, you know, those situations essentially turn the whole equation upside down. This is like, you know, instead of paying $5 to take 3 shots for a prize, you're basically paying $1,000 for 1 shot. It just doesn't make any sense. So the goal here is to pay as little as possible for the right to acquire a win, period. That's what a loss is. A loss is just the cost of doing business. In addition to your commissions, clearing fees, platform fees, all that stuff, a loss is just the cost of having a chance to acquire a win. So don't try to avoid it. Try to minimize it. Don't try to avoid it. So make it so that the cost of entry is reasonable enough for the return when you win, so you can be ahead. That's it. This is the Warren Buffett formula. This is the Jesse Livermore formula. This is the JP Morgan formula. You know, it's the same formula for everybody. You will not avoid the loss. And you cannot avoid the loss by looking the other way. You can't avoid the loss by pretending like it didn't happen. Your goal is to take the loss as as efficiently and professionally as you can with a minimum amount of errors, so that you're paying as little as possible for the right to win, right? For the chance to win. It's not a right. That's all it is. That's all it is. Okay? Don't forget this. This is really important. So a loss is not your enemy. A loss doesn't mean that you're not a great trader or a man or a successful woman. It doesn't mean any of those things. A loss is just what costs are you choosing to pay based on your plan and time frame and a whole bunch of other parameters. What costs are you choosing to pay for the ability to participate in a win? And if that formula is upside down, then your results will be upside down. It's common sense, right? So I want to simplify this to the fact that if you want to play, you're gonna have to accept losses. If you don't accept losses, you will probably play at the highest cost possible. You have to accept those losses. Good luck.